Hello traders, it's 8 a.m. Chicago time on Thursday, the 8th of February 2018. Here we are again, another trader bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, equities are a little bit higher. The U.S. equities sold off on the close yesterday and are pulling back a little bit today. We're pushing the overnight high in the S&P. We've got some room in the NASDAQ on the way up. The NASDAQ's trading 6609, 6608. By the way, the NASDAQ jumps around in three-tick increments right now. It's interesting to see that it's trading like the DAX. But overall, we did see quite some selling on the close. And I tweeted yesterday afternoon about the strong potential for continuation lower. I'll explain why in a minute when we do our review portion. As far as what's pushing us around, nothing additional, but we need to bear in mind that we have the budget issue looming, the government shutdown looming. There has to be an agreement today, and apparently they have come to an agreement, and that'll be probably what will push us around a little bit today. They've agreed to raise defense and some other expenditure by $300 billion over 2 years, and just spend. So we'll pay. The news is going to be relatively important today to see if this deal actually goes through and how that impacts the markets. Other than that, what other expectations we have for the day? Pretty much everything is behind us. We did get initial claims this morning. We're looking for EIA natural gas at 10:30 Eastern. No impact on at least the products that I trade. But as far as speakers, there's really nothing on the calendar. Fed Speaker Kashkari speaking currently in a moderated Q&A. He's a non-voter. So the calendar is clear. Let's jump in and look at our review of yesterday. So yesterday the market was opening above value in range 2685, and the expectation is we would pull back to around 2670. We would bounce off of 2670 for a run at 2722 being the key target. As I'd mentioned, above there, 3150, that's that line right there. 3150, that's the next marker up. But the key on any up move, the key figure that we're looking to test is 2722 based on the auction. The market did that, but it didn't do it in this way. It didn't actually pull back and run up. It just ran straight up. So what we had is a combination of scenario 1 and 2. The secondary scenario was a lot more in play, in that we looked for a market to push up 2722 or thereabouts, this area, and then to rotate down. Once it got into value, remember I said if it gets into value, then I'm looking for value being 2669.50. If that's not defended, then we're looking for a pretty good opportunity at 2637, which puts us about 30 points below. And that's what I was looking for on the drop. It couldn't quite get there. Looking at yesterday's action. Looking at yesterday's action here, I've switched the Renko to 2. See how noisy that is? There's a lot of activity. But overall, what the market did yesterday, it pulled back. Could only get 2680, 75. Remember, I was looking for 70-ish. And then it finally got to the 22 right there. That's our key figure above, pushed through by 4 points, and then started to rotate down, consolidated. A very orderly market, very Gaussian profile, although quite wide. The volume yesterday was about twice the pit session norm, as opposed to the prior day, which was 3 million, 3 times as much. Things are, the range and volume are calming down, and of course we see that in the VIX as well. But what we did is we broke the initial balance high to get to 22. We overextended 22 by 4 points, and then we started to rotate back down, balance out at the prior day's high, and then we get this burst of selling into the close. The day type is neutral extreme. That's what's called a neutral extreme, where the market breaks one side of the initial balance, which is this yellow line. Oop, I overshot. This yellow line is the initial balance high. This yellow line is the initial balance low. Note that yesterday's low was the prior day's initial balance high. I really did expect it to push lower down in here, but overzealous buyers stepped right in and took it right up. So we broke the initial balance high, which gives us a normal variation day, but then once we pushed through the initial balance low, we became neutral. Once we closed below the initial balance low, we became neutral extreme, and this generally has a relatively strong probability of continuation in the direction of the neutral extreme wherever the market closed. And so I tweeted that out yesterday, stating that I'm expecting it to continue lower. And I sat around waiting for this 37. It just couldn't get to it. It went to 45 and a quarter, and it bounced up. It just never revisited that level again for the session. Here's what it did in the overnight session. We're again seeing about 3 times the overnight volume. We're again seeing a third standard deviation range. In the overnight session, we're approximately 40 points. We are over 40 points now, 41 points. Last night's Globex session is bigger than the prior session's Globex session, Wednesday session's Globex session. There's a lot of activity here, pretty good range, and really good volume. What does that translate to? It translates to a high probability that the high time frame exploration continues up and down. So I'm looking for continued volatility, continued thinner than normal liquidity in the markets, and pretty good exploration still. These are, if you have the account for it, these are great times to be at least watching the market, because the rotations in the auction is happening very, you don't have to wait for hours for it to complete a test. It does it within minutes, and it's just a great time to be in front of the screen. In fact, I usually take a break during the day, and since last Friday, I'm in front of my screens all day until the market closes at 4 o'clock Chicago time. So it's you don't get to see this very often. We've been in a lull for about 2 years. So with that being said, there's some really strong activity overnight. We have a clear consensus in the overnight session. It's a little bit noisy, but the profile here is a little bit balanced. We have a weak high on the overnight session. We've got a little bit of a separate distribution at the high there. A lot of volume went off up here, and it's not backing off. And this looks like it'll likely open and find its way up almost immediately. We saw a similar kind of setup yesterday right here, where we opened, tested down, just like I'm drawing, tested down, and then immediately shot up. Okay, so it's that's what we're setting up to do. The delta in the overnight session quite neutral. The inventory in the overnight session has been negative or short and long. And currently it is long. We have a gap between the yesterday's close and the current prices. But the delta is not really there. For this kind of volume, the aggression is not all there. So this movement here, if you look, maybe it's a little too squished, but if you look closely, you'll see that this move, let's draw that. This move on the delta ripped up. Very little happened in terms of delta. So what this shows is that price is moving, but there isn't a very big aggression to it. Or as price is moving up, there are almost as many aggressive sellers on the way up as there are buyers, or the offers being pulled so that no size is trading as price is going up. We don't know which, but we know that there isn't a very strong commitment on this move in terms of volume, and I pay very close attention to volume. So if we look at it on a different, from a different perspective, here's the run up, the last run up, and it's just not. It's traded both ways. It's traded both ways, and it's not really. There's price is kind of pushing. Price is pushing very with very relatively small volume, delta volume, even into these collision areas here. We had two collisions just now, and it's resting. There really isn't that much going off in these areas on a relative basis. And I have to keep saying relative basis because it's, we're in a special environment. So to look at where we are, we're at we've already tested down. We've gone into value here. The market, though, is still outside of yesterday's value, inside of yesterday's range. So we're currently trading right here, and you have to take that into context, to take that into perspective. It's important to note that we're not really all that strong. So this morning I'm expecting a fair amount of resistance as it continues to push higher. So the overnight session has tested down, as you saw, and consolidated, tried again, pushed higher, and then now we're doing this. That's what the overnight session looks like. But in terms of yesterday's profile and where we stand, it's still relatively weak. We're still below yesterday's point of control, below the value area. We're basically opening in the same spot as yesterday. Yesterday's open at 26.87 and a quarter. Today is likely to open in the 26.85 area. It's basically the same thing. Yesterday we tried higher. We pushed to 27.22. Now listen carefully. We pushed to 27.22. We could not hold it. We did not get to the LVN. We didn't clear the next big hurdle here to get to the bigger part of the profile, way up here above 31. So my expectation today, given this setup, is I'm going to look to sell. I'm going to be an aggressive seller. Again, trade your plan, not mine. But I'm going to be an aggressive seller on the initial push up. So what I'm expecting is that the market will likely continue higher. I'm waiting for 2670-ish, 68 to 70, and I'm looking for an opportunity to sell. I'm looking for this to retest that low from yesterday and potentially consolidate, fail to come back up, continue lower, and I'm looking for 37 to be retested. So I'm looking at this whole thing here as a pullback pattern, and continuation. Continuation is likely forthcoming today or tomorrow. That's my main plan. Do you see the conflict between what the overnight session is saying and what the context of the real trade, which is the day session trade, is saying. Great, the overnight session is fairly aggressive right now, but the overall, what we accomplished yesterday, what the story is that we went back up to 27.22. We could not hold that price. We could not push through the LVN to start tackling the next big area above, and we closed on a neutral extreme day down. So any movement back into value, I'm going to look to sell. And I'm looking for it to retest yesterday's low at 67. So that'll be a primary target right down here, and then push through. And then the extended target, or the big target that I'd like to see today, is 37. I'm expecting it to get hit. Okay, so my stronger bias is down on a push higher. Do you see how that was built? Okay, it's very important to understand how that was built, because maybe on a one lot you can trade from your gut, but when you start to trade 10, 20, 30, 60, 100 lots, you need to have context in play. You need to have to understand what the bigger players are doing and whose side you want to be on, right? So who are you trading against and who are you trading with? Very, very important to determine. So that's the first thing. The secondary idea is the market pushes up, pulls back, comes down, retests that low, okay, potentially, retests that low, finds buy the dippers, okay, and then comes all the way back, and then potentially neutral the other way, or does this all in the IB session, or the IB part of the session, and then breaks through, gets to 27.13, and then this will help squeeze shorts out. This shows that the flag here, or the pullback, is not ready for continuation, and we end up going the other way. In either case, I'm shooting for scenario 1, which is the push up, find resistance. I'm paying very close attention to bookmap for that. And then if it pushes through, then it's a loser, and that's okay. Losing is an absolute necessary part of trading, and it's good information. Unfortunately, it costs money, but it's like good food. You got to pay for it. And so, then I'm starting to look at, okay, it has entered value, it is holding value, and so now we're got to start shooting for 27.13 and potentially yesterday's high back up. And in that case, the biggest target becomes the 31.50. Right? So that's a lot of range. It's about 60 points of range or so. So that's the secondary scenario. So that's it. I hope that makes sense to you. You can see how the information could be conflicting, but if you put the pieces together, you're likely to put together a plan. And my job now is to pay very particular attention to what happens as we push into the yesterday's value area, which is a 26.93. I got to pay very particular attention to what happens to this up here and how thick it gets as the market moves up. And I look to lean against it, push the short side. The key areas are down here, 70 on the ladder, and then consolidate, continue lower, looking for 37. It's about 50 points potential on that idea. Might take all day, but that's what I'm looking for. The last thing I wanted to talk about real quick here, I know I'm over my time, maybe 3 minutes, is responsibility versus what the market does. And, because of the craziness of Monday, I'm getting a lot of direct messages and emails from people who just got crushed. They're in options positions that are upside down. They're short puts, and they've been making money shorting puts, and then volatility kicks up. So now they're way, way, way in the hole on, a 3 standard or 4 standard deviation move. The The market does what it does, and we can identify what the market did against us. That's okay. But hear me out. It's your responsibility to get out. It's your responsibility to define where you're wrong. It's your responsibility to understand that you cannot be attached to one trade. You can't have one trade take 67 or 70% of your account. It is sheer and utter stupidity to do that. And I've done a lot of stupid things, so I know. But it is absolute stupidity to sit here and just piss away a good part of your account because you couldn't accept the loss. If you can't accept the loss during the trade, then you don't have a plan, then you didn't accept the loss before you put the trade on. Take it off, find the next one. You're gonna take losses. I guarantee you, if there's anything I can guarantee in this business, is you'll take losses. And so losses are just small samples. Keep them small and just keep taking as many samples as possible. So your goal is not to come in here, study hard, and take the best trade. If that's what you think you're doing, then you're joking. You need to go do something else. Your job is to take as many trades as you can, as many as possible, with small predefined risk for relatively reasonable returns, and do it a lot, again and again and again and again, because we're playing probabilities. We're just throwing the dice every time. Throw and throw and throw. And your edge doesn't show up because you took one trade. I took one trade. It was a winner. It was the trade of the century. It was one trade. I worked for 10 years to take one trade. It was a winner. I'm a 100% winner. That's not what we're after. What we're after is I took 10,000, 20,000, 30,000 trades if I'm a day trader, or I took 100 trades and won 67% of the time. I have a 1.5 or 2 to 1 factor. I'm good. I'm making money. It's not as stressful. But sitting there nursing a bad trade all day long and then making the market responsible for it is a joke. Don't do it. It's your responsibility. The market's going to do what it's going to do. You can't help that. But it's your responsibility to act. So don't look at anybody but yourself when you give away much, much more than you expected. Good luck.